Welcome back again to my channel. I am so delighted to welcome you once again to my channel. In today's video, I'm going to be showing you how I was able to grow a $1,000 account to over $10,000 account in just 1 week. For the past 1 week, I have been profitable consistently because I've been following the trend. So if you have been trading gold, you will understand that gold has been in an uptrend for the past few days, and so many people do not even understand the importance of trading in the direction of the trend. And so that is why in today's video I'm going to be sharing with you my simple trading strategy that I use to trade gold, and this strategy has been generating money for me consistently on a daily basis. I am talking about the moving average trading strategy. The moving average trading strategy is a trend following trading strategy, and honestly speaking, this trading strategy is mind-blowing once you understand the mechanics of this strategy. So in this strategy, we only make use of just two indicators, right? We plot out two indicators, that is the moving average exponential twice, and we have different settings for it. The first is the slower and the second is the faster. So for the fact that I am a day trader, I normally use the 15-minute time frame for my trading, right? And that is the time frame that I always use for this particular strategy. So what I do is I go to the 15-minute time frame and I plot out two indicators, which is the moving average exponential two times, and I will do the setting. One will be 20 EMA and the second will be 5 EMA, right? So in this strategy, I'm waiting for two things. One is a crossover and the second is a pullback, right? So this strategy works extremely well during a trending market, and like I said, gold has been trading for the past few days. So that is why I've been making use of this particular strategy, and it has been favorable to me. So my advice for you guys is to make sure that you watch this video from the beginning to the end. Don't skip any. Watch it from the beginning to the end, and you are going to understand what I'm talking about in today's video. Many people do not understand the importance of using a simple trading strategy. Some traders prefer using complicated strategy. Don't know that forex trading is not just about knowing the best strategy, it's about having a consistent mindset, right? Building a simple trading strategy with the right psychology. That is what matters in trading. So this moving average strategy has been my major trading strategy, and that is why I normally use it, most especially when I realize that a particular pair is trending. And like I said, I always trade gold. Gold has been my favorite pair, right? And that is why whenever gold is trending, I always use the moving average strategy. Unless if gold is in a ranging market, that is when I will decide to use maybe support and resistance alone. But for the fact that gold is trading, I normally use the moving average crossover. And for the fact that gold is trending, I always use the moving average trading strategy. So let me give you an example of what I'm talking about, and after which I'm going to share my live chart with you guys for you to see how I trade this strategy profitably. And like I said, for the past 1 week, I've been consistently profitable in the gold market, right? Because I'm trading in the direction of the trend, right? I'm trading alongside with the big guys. So let me show you an example of what I'm talking about so that you understand how it works. Now, this strategy has to do with two indicators, right? It has to do with two indicators, but if you want to use one indicator, you can, but it's all your choice, right? The two indicators has to do with the faster EMA and the slower EMA, and like I said, in the 15-minute time frame, I make use of the 5 EMA and the 20 EMA in the 15-minute time frame, and I wait for crossover. So when the 5 EMA crosses above the 50 EMA, I know that the trend have changed direction, and I trade in the direction of the trend. Or you can use one moving average, you can use just the 20 EMA, and when price crosses above the 20 EMA, you know that price have changed direction. That is why it is very important that you have an edge against the market, so that you have a sniper entry. So if you watch this chart clearly, you see that this black line is the 20 EMA, while this green line is the 5 EMA. So for the fact that the 5 EMA crossed above the 20 EMA, the trend changed direction, right? So now you can clearly see that the market is in an uptrend, right? Because each time that the market comes to the 20 EMA, it gets rejected, right? So what you do is you simply watch for the price. Whenever price comes to this 20 EMA, you take a buy trade. Whenever price comes to the 20 EMA, you take a buy trade until the price breaks below the 20 EMA. That is when you will confirm that the trend have changed direction, right? So if you watch clearly, you see that each time price comes to the 20 EMA, the price tends to bounce off from it, and each time price comes to the 20 EMA, the price tends to bounce off from it, right? So this is one of the simplest trading strategy, right? Whenever the market is trending, this is the best strategy that you can implement, because if you watch, you see that the pullback is not deep, right? For those of you that are waiting for the market to make a pullback to the previous resistance level, which may turn into support level, the market might not make a pullback to the previous resistance level, and that is why you need the moving average, because the moving average will now act as what? As an area of value for you, because the market cannot be able to make a pullback to the previous resistance level turn support. Rather, the market will prefer to make a pullback right to the 20 EMA. So that is why the 20 EMA becomes what? Your area of value, your support level in an uptrend, right? So once you understand market structure, you need to trade in the direction of the trend, right? In the direction of the trend. Very, very important. So this one is for those that are using just one moving average. Like if you want to use just one moving average, like for this one, you can see that we can use the 50 EMA, right? It's not compulsory that you must use the 20. You can use the 50 EMA depending, right? It depending on your style, right? For this part, this is the 50 EMA. You can clearly see that the market is in a downtrend, and when the price makes a pullback to the 50 EMA, it gets rejected and continue going down. And whenever price makes a pullback to the 50 EMA, it gets rejected and the downtrend continues, right? So if you watch, you see that for the fact that the market is clearly in a downtrend, the 50 EMA is now acting as what? As a resistance level, because the market is in a downtrend, right? But if the market is in an uptrend, the 50 EMA will be acting as what? As a support level, right? So you watch for breakout until price breaks above this 50 EMA. That is when you will confirm that the trend have changed direction. And some traders do not even understand how to use this moving average strategy. It's very simple. Once you understand how to use it perfectly, you make money, most especially if the market is trending. And like I said, the moving average strategy doesn't work well in a ranging market. It works extremely well in a trending market because it will give you a better risk reward ratio. Imagine where you are risking just 20 pips to make over 200 pips. Just say you are risking, let's say, $20 to make over $200. That is one of the best trading strategy, honestly speaking, because forex trading has to do with risk reward, right? Are you risking higher or are you risking lower? So what is your take profit? But with this strategy, you can risk lower amount of money and you are aiming to make higher amount of money. That is where the risk reward comes in. So the moving average strategy will give you a better risk reward ratio. So with this strategy, honestly speaking, I don't think you'll be able to blow your account once you respect money management, right? Like I said, money management is very important in forex trading. You need to respect money management. It's very, very important. So let me show you a live chart, right, for you to understand what I'm talking about. All right, we are on a live chart of gold, right? So this is a live chart of gold. Yeah, this is a live chart of gold, and like I said, as a day trader, I normally make use of the 15-minute time frame as a day trader because that is the time frame that day traders normally use to trade the forex market. So now, for the fact that gold has been trending up, right? Gold has been trending up. The moving average has to be the best indicator for this strategy because you are trading in the direction of the trend. So it's a simple trading strategy. There is nothing complicated about it, and with this strategy you can make so much money, right? So what I do is I use two moving average, right? The slower and the faster. So if you want to do that, you simply go to indicator and then you type in moving average exponential. This is it. So what you do, you double click it and it will pop out on the chart. So for the fact I have it, I'll just make it visible, right? I'll make it visible. So these are the two moving average that I'm talking about. The black line is the 20 EMA, while the blue line is the 5 EMA. So this is just what you need. This is just what you need. You don't need any other thing. This is just what you need, right? So for the fact you have plotted the two moving average, so the next thing you have to do is to go to the setting. This is the setting. Go to the setting and do the changing. You can change the color if you want, or you can change the input. Like this is the 20 EMA. You can change the input and then you can click OK. Do the same thing to the second EMA. You can go to the setting. This is the setting. Change the input. This is 5, right? You can change it to any number you want. You go to the style, change the color, and then you click OK, right? So once you have done that, you can clearly see the two moving average on the chart, right? You can clearly see the two moving average on the chart. So now, for the fact that the market is clearly in an uptrend, we are not looking to sell, right? Because the market is clearly in an uptrend. We are not looking to sell. We are only looking to buy, right? So when do we buy? We wait for crossover, right? So once a crossover has been confirmed, we know that the trend have changed direction, right? And we trade in the direction of the crossover. But if we miss the crossover, we can wait for pullback. Price can make a pullback to the 20 EMA for us to take our buy trade. So if you watch here, you see that for the past few days now, the price has been in an uptrend, right? The price has been in an uptrend. Let me just maximize this so that you understand what I'm talking about. Okay, you can clearly see that the price has been in an uptrend, right? So if you watch, whenever the price crossed over, you take a buy trade, right? Whenever the price cross over, you take a buy trade. So if you watch clearly, you see that the 5 EMA crossed above the 20 EMA and the trend changed, because this was clearly a pullback, right? And if you watch, see that the pullback are not that far. The pullback is small, right? The price can just make a pullback of 40 pips or 50 pips and the major trend continues. That is why I said forget about the pullback, focus on the trend, right? So where do you take your trade? You take your trade either when a crossover has happened or when price makes a pullback to the 20 EMA. So in this scenario, you can simply take a buy trade when the 5 EMA crossed above the 20 EMA and then makes a pullback, right? So this is where you are expected to place your buy trade, and your stop loss should be like 20 or 30 pips below. The same thing here, when the price make a crossover or the 5 EMA crossed above the 20 EMA, you simply take a buy trade. The same thing here, when the 5 EMA cross above the 20 EMA, you simply take a buy trade. So the same thing here, right? So what you should be doing is you wait for a pullback, right, for you to take what? A buy trade, right? Let's say if the price is going down, right, and you know fully well that this is just clearly a retracement, what you do is to exercise patience and wait for a price to make a crossover again, right? So once the price makes a crossover, it means that the retracement is over. You cannot place what? A buy trade, right? So once you place a buy trade, you can simply wait for the price to make a pullback to the 20 EMA, and when the price makes a pullback to the 20 EMA, you simply take a buy trade, right? So with this strategy, I was able to grow my account from $1,000 to $10,000 because I was only trading in the direction of the trend. For the fact that I've plotted my two moving average, which is the 20 and the 5, I was waiting for a crossover and a pullback. So if you watch, see that the trend has been going on for so long. If you watch, see that the trend has been going on for so long. So what I do is I disregard the sell trade. I only focus on the buy. So when the price makes a crossover, like when the price cross from up to down, I don't sell because I know the major trend is up. because I know that that move is not going to give me anything. So when the price or the 5 EMA cross below, I don't take action. I wait for it to cross above because I want to trade in the direction of the trend. Because once the price cross below, the movement is not that far, right? It can be like 10 pips or 20 pips or even 30 pips, and the uptrend continues. So like as the price now cross below, or the 5 EMA cross below the 20 EMA, I don't take a trade. I wait for the price to cross above, right, for me to confirm that the retracement is over. So once the price now crossed above the 20 EMA and the 5 EMA crossed above the 20 EMA, I will now know that the retracement is over and the main trend has continued. So I will place my buy trade and my stop loss will be below the 20 EMA, right? So I'll hold on to my trade and then wait for what? For a crossover. So if the price cross below, I can take my profit and wait for it to cross above again. Like for the fact that I place my buy trade somewhere here, right? I'll wait for the price to get to this level, right? This is where the price breaks below the 20 EMA. So once the price breaks below the 20 EMA, as a day trader, I can close my trade, right, and wait for the price to cross above the 20 EMA again for me to place another trade. Because the reason why I'm taking my trade, I want to be sure to make sure that the trend will not reverse against me. But if I don't want to do that, I can simply place like 2 or 3 trades. For instance, as the price crossed above the 20 EMA and the 5 EMA crossed above the 20 EMA, I can place 3 trades at once. So 2 trades, I will set them with a specific take profit, like 50 or 60 take profit. And once the price hits my take profit, I will now break even. The remaining one, I will break even, right? So breaking even means if the price reverse back to my entry and hit my break even, I'm out, but I will not lose any money. But for the fact that the market is clearly in an uptrend, you can see that the price hardly get back to my entry. So this is my entry. So this is where the price got to and continue going up. See where the price got to and continue going up. So in this scenario, I can use one trade and ride a massive trend, right? Because I've already broken even, the price cannot come back to my entry, right? So what I will do is I will hold on to that particular trade and then I'll just be moving it slow. I'll be moving it up slow. As the price is going up, I'll be moving it up slow, right? So with that, you can clearly see that the moving average is one of the best trading strategy that you can use to make money consistently in the forex market. And like I said, you need to watch to see the major trend at a higher time frame, because you don't need to rely only on the 15-minute time frame, right? You need to go to the 4-hour time frame, the daily time frame, to confirm the major movement, to know the major movement of the market. So it's the higher time frame that will give you the confidence to trade the lower time frame. So for the fact that you have gone to the 1 hour, the 4 hour and the daily time frame, and you have confirmed that the market is clearly in an uptrend, that is why you have to focus on only buying and knowing fully well that whenever the market is going down, it's just a retracement. So the down movement doesn't take long. So if you watch, you see that this is the retracement, it doesn't take long, right? This is another retracement, it doesn't take long, but the major movement is up, right? So if you want to do the calculation, you see that this is the retracement, this is a retracement, doesn't take long, and this is the up move. This another retracement, this is the up move, right? This another retracement, this is the up move. This another retracement, this is the up move. So you see that the up move is higher than the retracement, right? So that is why you need to trade in the direction of the trend, right? If you watch again, you see that the market got here and made a little retracement, and then the up move continue again. The market got here again, made a little retracement, and the up move continue again. So if you watch clearly, you see gold is clearly in an uptrend. So if you are selling in this case, you are doing yourself a disfavor, because you are going to miss so many pips. But if you are trading in the direction of the trend, if you are only buying, kudos, you are trading alongside with the big banks, right? Remember, the trend is your friend and you need to trade in the direction of the trend, right? So for the fact that the market is not coming back to retest the previous resistance level, that is why the 20 EMA is there for you. So in this scenario, the 20 EMA is now acting as what? An area of value. Like if the market breaks previous, like this is the previous resistance level, right? Once the market breaks a previous resistance level and doesn't come back to retest it, the market will retest at the what? At the 20 EMA. Right? So if you watch, this is another previous resistance level. Let me draw it for you to see what I'm talking about. This is another previous resistance level. Right? This is another previous resistance level. You can clearly see it. This is a previous resistance level. Right? This is a resistance level. So now if you see that you wait and wait, you can clearly see that the market didn't come back to retest it. Rather, the market had to find support at what? The 20 EMA. Right? You can see the market went down to the 20 EMA and then continue going up. So that is why you need to trade in the direction of the trend, because what? The trend is your friend. So with the help of the moving average strategy, you can be able to know the directional movement of the trend. If you watch, you see that the market is making higher high and higher low. Right? This is what we call higher high and higher low, higher high and higher low. This is it, higher high and higher low, higher high and higher low. This is another higher high. So you can see that the price is breaking previous high consistently. So you don't need a prophet to tell you that this is clearly an uptrend, and you are meant to only trade in the direction of the trend, right? Because if you are selling in this market, you're not going to gain anything, because that movement is not strong. It's just small pips and the uptrend continues. That is why, like I said, always trade in the direction of the trend. If the trend is up, make sure you are buying. If the trend is down, then make sure you are selling. For the fact that this is good and the market is clearly in an uptrend, you are expected to do what? To buy. So that is why I said the moving average is very, very reliable during a trending market, because price tend to receive support at the moving average. Just like I said, you need to plot two moving average, the slower and the faster, right? And you need to use the exponential, because the exponential moving average tends to tell you what is currently happening in the market compared to the simple moving average. If you're a day trader, you can make use of the exponential, moving average exponential, because it tells you what is actually happening in the market right now. Right? So once you plot out your two moving average, you change the setting. One should be 20 period, the second should be 5 period, and you wait for crossover. If the 5 period crosses above the 20 period, it means the trend have changed direction, and that is when you are expected to take action. And for the fact that the market is clearly in a strong up move, you are only meant to buy, because if the price or the 5 EMA cross below the 20 EMA and you place a sell trade, the price will just move a little bit, and then the up move continues, and to your greatest surprise, the market might hit your stop loss. So that is why I said only focus in the direction of the trend. So in this scenario, like I said, if the 5 EMA crosses below the 20 EMA, please do not take action, right? Just wait for it to cross above it again. So if it eventually crosses above it, that is when you expect to take action. Like this is what I'm talking about, right? If the 5 EMA crosses below the 20 EMA, you don't need to take any action, because this is clearly a retracement, right? So where you need to take action is when the price or the 5 EMA crosses above the 20 EMA. You cannot take your buy trade, because the retracement is very small, but the movement of the trend is very high. So my advice for you guys is to go to your demo account and backtest this strategy very well. Make sure you backtest this strategy very well, and if the strategy is working for you, you can then implement it on your real account. So ladies and gentlemen, that is all I have for you in today's video. I hope you love this video. If you do, give us a thumbs up. Don't forget to subscribe to my channel for more educative content like this, and also don't forget to turn on the notification icon to be the first to be notified whenever I publish new content. I will see you again in my next update. Enjoy the rest of your day. Bye.